What's up, guys? Welcome to another episode of Rawstocks. I'm Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow. So we had a nice big opening gap down, right, from the Tesla delivery numbers or whatever reason you want to call it. But we had that gap down open, right? We traded down a little bit, and then we ultimately traded up higher and sold down a little bit. So if you look at it from a smaller time frame perspective, we'll show you what's going on. But the things that we want to look at on the daily chart, and as you can see, I have a range filter on my candles right now because there's something I wanted to show you guys regarding the way the candles are with the range filter. But let's kind of look at what price did. So with that open and trade down, we traded into the 4 hour fair value gap, and we tested this candle here. We ended right on that level in that fair value gap, and we traded higher from there, right? The market just ripped it in the other direction to the upside. When we ran the upside, we ran a test of this candle. We know that liquidity and orders are built up inside of this candle. So we came up, we hit some sell orders, we came back down. I'll show you on the smaller time frame, and then we came back up to end the day. Important things to note on the daily is that we did close above the doji candle that we had on Friday. So that does give a little bit of a bullish look to it. We are trading off of this low. We do have higher low, lower low, right? Higher low, right? So we are creating this, trend line of support, if you will, coming off the lower low to the higher low, right? I took off the inverted head and shoulders. It's starting to look really sloppy. Not sure if it's still going to play out. We do know that there's upside targets. So regardless of whether it is an inverted head and shoulders or if we're just going to run to the upside and take out some of these levels that we have, we know what those targets are, right? Where we're likely to encounter resistance as we head higher. As marked by some of our fair value gaps, some of our order blocks, and a point of control. Right? We also know we have this big daily fair value gap here, likely to offer at least some resistance. If we trade up, we could sell off on it. We could trade up, come down, and then end up breaking through it, heading to this daily order block. So lots of upside targets, also lots of downside targets. So we'll be seeing what price wants to do tomorrow. Definitely something to also note with these range filter candles. Okay, when we break above the median line or below, okay, we often see the candles turn white. When we break above, they start to turn black until they start to break out, then they turn white again. Okay, so what we have right now is we have black candles. We were unable to close below the range filter low, and so those candles are still black, right? As we started to come down here, they started turning white, or they still stayed white. We crossed below the median of the range filter. They turned black. We have not got them to turn white for a move to the downside. They continue to remain black. So if we cross above that median line and the candles start turning white on the range filter, we're looking for more continued move to the upside, right? And that upside would be order block, and then above resting order blocks, we have a gap right here on the daily. So that's something I'm watching for using that range filter is, do we cross this median line 258? Okay, because right now it's flatlined. So do we cross it, break above it, candles start turning white? We're looking for momentum to then start pushing us to the upside. Okay. We also want to look at the possibility that our point of or our PO3 for the week is often accumulation, manipulation, distribution in that order. Then looking for continued distribution or redistribution or reversal on Thursday with a reset on Friday. Okay, we got our reset in this doji on Friday. Okay, we could call this accumulation because we have a wick down here, we have a wick down here. So in between here, ultimately just kind of trading sideways. As we try to go higher, we try to go lower, and it stopped, right? So we're accumulating orders. We're looking for a potential manipulation move tomorrow. Okay, and whether that manipulation comes as a run up into the liquidity and then a sell down, quite possibly. Does it look like a sell down? Doesn't have to go to a lower low, but we're just looking for a move that's going to run opposite of where price actually wants to head. That's going to be the manipulation. Okay, so that could be a gap down open, run down, test some of the lower levels, right? And then run up. Is it going to be a run up back into liquidity where we took liquidity here? We have liquidity in this wick. Is it going to continue to gather orders and then just sell off from there? So things we're watching for is manipulation happen on the Tuesday, right? And then we'll be looking for the real move to happen on Wednesday. So just be aware that that's a possibility. It doesn't happen every single week, but we did see it last week, and I'll show you on the lower time frame where we had Monday, orders accumulated, right? We had this big wick of manipulation. We ran up, sold down, right? And then the next day, distribution, sold down. We got the reversal in that Wednesday trading session, and then we had continued reversal to the upside and then a reset day. So again, we got our accumulation happening. Are we going to be looking for manipulation to the upside, then a sell-off, manipulation to the downside, continue to run up? At this point in time, the way things are looking, I'm kind of looking for some kind of manipulation to the downside and then a continued move higher. I do think we're going to at least want to test this 258 level and then some of these, maybe this bearish fair value gap, right, in the 260s before we make a decision to head much lower or if we continue to run higher. Okay, so that's what I'm more looking for, is for some kind of manipulation to the downside and then a run to the upside. Let's go ahead and drop down into the 4-hour chart because we do have some order blocks in the 4-hour chart. Okay, we do have black candles. Again, we had candles turn white as we sold down. Now we have the candles turning back to black. Are we going to break this and have the candles turn white, right, and head higher? That's going to be a sign that things are strengthening in the market as far as Tesla goes. If we start getting those white candles, those are a good sign that you could potentially take a long position and be targeting the 4-hour fair value gap. We also have, the 4-hour fair value gap here. If we extended it across, we have it as levels. We also have the consequent encroachment of that fair value gap, right? So we break above on the 4-hour chart, 255 and some change, 255, let's see, 75 or so, right? If we break above that, could we look for a price to run up into that fair value gap? Definitely. Closing some of these levels out. Okay, but we are looking for, if we ran up there to close the fair value gap would be very bullish, and that would take a candle body close outside of the bearish fair value gap close level. Okay, if we did that, we'd be looking for a push into this order block, right? So again, looking at downside too, right now we have this 4-hour fair value gap that we had marked off as a level. It's a bullish fair value gap, right? We set it back on last Thursday, came down, we traded it, we hit it with a wick perfectly. There was a good chance to exit if you were in a short position there, and then it ripped up in the other direction. Okay, and then we have kind of a hammer candle here to end the 4-hour session today, right? So I did mark off the top of this candle here as buy side liquidity. So if we were to, see this trade up through the buy side liquidity as the potential manipulation move in the beginning of tomorrow, right? Then we sold down. I'm looking for that buy side liquidity to potentially be taken first before a sell off. If it doesn't take it first, then we're targeting back to this fair value gap, right? We're targeting these different levels and then looking for continued upside. Okay, but again, the candles are black on the range filter, so a little bit indecisive until candles break one of the range filter levels and then they'll turn white. That's where you can catch some nice momentum moves. Drop down to the 1-hour time frame, right? Same targets. We got white candles, right? So we saw the candles turn black. If you use this range filter, it can be very helpful, but not always, because sometimes you see here we're coming off a bottom, candle turn black, right? Candle turn white, then it sold off. So it's not always a surefire thing, but it is something you can watch for candles to turn from white to black. Okay, right here we had black candles, we turned white, right? We had a nice breakout. We're still with white candles, so if it starts breaking below this median tomorrow, we could be targeting lower. We could be targeting back into this order block. We could be targeting this wick of liquidity here that we saw come down into the 4-hour fair value gap, right? So looking for, again, that potential manipulation move to give us either a little bit lower or a little bit higher before the price really shows what it wants to do. And so that's something I'm watching. Okay, let's zoom up this chart a little bit. I'm going to turn off the filter for a second just so you can see that the range filter does a much different job of showing you what the candles are doing. It really shows kind of a little bit more of the momentum as these show you black or green candles, or black represents bearish candles. Right? But something I want to notice here is we have a lot of wicks. Right? So the fact that we traded down, nearly took all the liquidity in these wicks, and then ripped up. This was a draw on liquidity here, again trading into the fair value gap, and then they ripped it up. But we didn't set a higher high, we just traded into the liquidity in these 1 hour wicks. Okay, so we had this wick, we traded back up into it, got a bearish candle and sold off. Now we've traded back up through it, right, up through this wick, not quite setting a new high, and then we sold off again. So is this just, right now, I'll show you, it looks a little bit just kind of like a bearish flaggish sort of deal, right? So we got that kind of setup. Is this just a bear flag, and are we going to rip up higher? We'll have to see. A manipulation move could take us just down to continue into this kind of price channel that we got going on, right? Just trade down, and then we could rip it up in the other direction. Certainly a possibility. So those are things that we're going to be watching for as well. Okay, and again, you can see a closer look at the buy side liquidity found here. We could see a move that potentially wants to take us up into this 1 hour wick, right? Pop up, make it seem like we're heading higher, take that liquidity, sell down, right? Where would we sell down to? Probably back into this liquidity wick, because I do think that the eventual move wants to go higher. Okay, but we are looking for a potential that we're going to see a little bit more correction. So there's a lot of things going on. We also have this 1 hour fair value gap down here, also in an order block. Right? So if we were to take out this 4 hour fair value gap, we could still see price come down, trade down into this 239 level, which was something that I was targeting for today and we didn't quite get. Did close some positions near the low of this, re-entered in the same position up here, didn't quite catch the top, which was a little bit disappointing, and never thought we were going to quite head that high today, but averaged back in. So could we see this come back down, give us another exit on some of those puts before we head higher? Right. Again, I do think the ultimate goal is that we are heading up into, we have a 1 hour order block here. We have the 4 hour fair value gap here. So I do think the likelihood of us heading up to take some of these targets is high. We're coming off of sell side. We're coming from premium up here. We got discount, right? We're heading back into equilibrium, right? And I do think that if we want to head even lower, which I do think also is an objective, that we want to come back as close to equilibrium as possible. And let's go ahead and look at where those fib levels place us. If we were to look at the high back here, and we were to look at the low down here, okay, we're near, but not quite 50% retracement, right? So that would be equilibrium of this entire move back to 256.80. But because there's an order block here, I would say we'd overshoot that 50 fib into the order block, which would put us into a 4 hour, near the 4 hour fair value gap. And I do think that potentially we could go up and hit that at 260, could maybe overshoot it a little bit into, right? But I would expect that if we headed higher, we'd see some kind of reaction in this order block to pull us back down, to then take us back into the 4 hour fair value gap somewhere. We also have a point of control from this entire move from over here down to here, okay? And that is around here, that 267. That is a volume point of control. And so that also is an area of interest, which also puts us near this order block in this fair value gap. So a lot of upside targets. Also, if we were to look at these fib levels, we could say consequent encroachment also, optimal trade entry at the 70.5% retracement, which is up in the 265, 266 area, right? So we could still plug up there, get a nice optimal trade entry right near that order block. Probably would overshoot it a little bit if we went in there, and then see a reaction back to the downside and whether it went much lower or just a correction. If we start heading into these order blocks, we do expect that there's going to be shorts lurking here, lurking here, lurking here, right? And then even higher up from there, right? So paying attention to those order blocks, we know there's orders sitting there. We know there was orders to go short here in this one as we sold off, right? Same thing here. We knew there was order short here and we sold off. So we could expect the same thing when we get back up here. There will be shorts ready to go and they will be looking to push price down. That doesn't mean that we come all the way back down here, because we will have order blocks that sit in here, okay, that haven't been identified or marked off. But we could look at this block here. We could look at this block here, right? I'd say this one probably looks all right, just because of how big this candle is and how long the wicks are. I'd be looking at the one from Friday the 29th. Okay, so if we were to come back down from a move higher, we'd be looking at that potential order block to be a resist or a support level that could drive us higher. So all things we're watching, all things that have to be considered when you're looking at where price is likely to go after it has a reaction to something. Let's take that fib level off. Let's go ahead and drop down into the 15-minute chart. Okay, we saw that reversal last week, right? If you caught this move, awesome. You start to see a lot more order blocks popping up as you drop down into the lower time frames. You can see we tested the order block right here, okay, with a wick, and we had a reaction. That's a really good example of how those order blocks work, right? Shorts were here. We know they went short here. When we got back up to it, they went short again, okay? And so then we traded back down to this order block, and we overshot it by quite a bit on a wick, but we still closed inside of it. So long orders were lurking. They ran us up, came back down, came back for this liquidity, right? And then started to sell off. Near the end of the day, we started to see another rally. Let's look at that fib level to see where we're at and see if that can give us any clues. Okay, that fib level takes us not quite to the 618. Okay, you can see it nearly got to the 618. So we also got big wicks. Liquidity is sitting in those. So again, tomorrow, looking for that move of manipulation. Are we going to open up here, right, and then sell down? Are we going to respect these fib levels and start to come down and then ultimately run back higher, right? We have, if this fib plays out as an optimal entry or a golden zone entry, we could look at 241.39 as being the full symmetrical swing, which would ultimately take this sell side liquidity, okay, that rests in this wick, overshoot it by a little bit, right, into a 4-hour fair value gap. And then would we see that run on liquidity be the manipulation move that would then plug us higher? Okay, so things we're watching for. Most recent change of character was bullish right here, but we traded back down. So do we expect it to go higher? If you drew some trend lines, you could also look at that wick and say that, if we support this and don't break it, could we bounce and go higher? So something to be watching for too is that trend. But the fact that something was a little bit suspicious with the fact that this move up here traded into these wicks and didn't take a higher high, right? So if you look kind of at Friday to Monday's price action, being Friday to today, right, we're really just kind of chopping. We did take a low here, but just with a wick, so that was a run on liquidity. Okay, we came back up. We took another run at buy side liquidity. We sold off. So are we going to continue to head to buy side liquidity and take more? Or from there, are we going to come back down and take sell side? Well, the most recent thing we did was we traded into buy side. So could we see sell side taken before we take a higher run up to some of those additional targets up above? I do think that is likely. And again, that would support the Tuesday manipulation move that we've talked about, that we come down, we trade into or take sell side liquidity, right? Manipulation, and then we see that distribution to the upside, and then possibly further distribution into Thursday, right? So that's something I'm definitely watching for, is to see, do we run on buy side again, which we already ran. The most recent run was on buy side here after we already took sell side. ran to buy side. So are we going to take sell side next, or are we going to push higher again and then sell down from there? Right? I don't think we're just going to go on a straight tear. It could happen, but it's early in the week and I'm not expecting it. So liquidity is important to know where it rests and what we've already done in the last moves to anticipate where we are likely to go. If we drop down into the 5-minute chart, we got a lot of order blocks going on, right? But today, let's go ahead and drop on the time zones. From previous videos, you guys saw me talk about it. It was the missed opportunity on the silver bullet. The trade I took was not the trade that was favorable, but you see in the silver bullet here, okay, we ran up into liquidity. We came back down to this fair value gap. That would have been a great entry point using the silver bullet technique to go long here, trading back down towards this fair value gap, and then you would have caught a nice move to the upside. Right? Didn't quite hit the fair value gap, but that's kind of one of the setups we're looking for in the silver bullet, is to take liquidity, right, or a draw on liquidity, which was this candle wick here. Didn't quite take it, but it drew on liquidity. Came back down to the fair value gap, ran higher. That move, if you would have caught the bottom of the wick there, would have been 247.39, all the way up if you would have perfectly timed it to 254.23. So that would have been a really nice move if you were playing stocks or options. Okay, so important to pay attention to those time frames with the silver bullets being inside the AM and PM sessions and knowing what to look for. I've shared before on the other videos some of the things that you look for in the silver bullet, but there's a couple different setups, and so sometimes they contradict each other, and you may take one and it doesn't end up being the right one. That's what happened today with the trade that I called out during the silver bullet. The second trade I called out today was on the FIB retracement here, and we caught, I'll show you on the 1-minute time frame, but we caught a optimal trade entry FIB, and it ended up going off for about 50% on the put call out. So in the PM silver bullet, we didn't catch too much. We caught, again, run on liquidity here. Okay, and there was no clear fair value gap to enter on that situation, but we did see, price come down, take the sell side liquidity that was in this wick, and then it ran up. So that could have been another silver bullet time frame entry, looking at it on the 5-minute chart, where if you would have entered long on that run on liquidity, you would have caught a nice run from 248 up to 251, 252. So again, those time frames can be very important when you're trying to catch setups. Those specific setups are will provide a setup every day. Just got to watch for them. Dropping down to the 1-minute, we're just going to look at today's price. This is what I trade. So again, looking at the silver bullet entry from this morning. So we got that early sell-off, right? I closed some of the swing positions down here. Near break even, wasn't quite to break even, but I got a good exit, right? And then I scaled in somewhere up here, and then we ended up running higher, right? So I averaged down on my position into 4 contracts short on 245, and then price ran against me. So I am looking for an exit on those positions tomorrow, see if I can get it. But also, if you look at the silver bullet, right, within that time frame, you could have traded this return to fair value gap and gone long. You could have also looked for this return to this order block and gone long. Both of them paid out nicely, right? So on this one, we had a draw on liquidity down here, okay? But if you waited for this first run back up here, okay, and then return to order block, you could have also entered long here. So 2 opportunities to enter long on that silver bullet trade. Fair value gap entry as we return to it, right? And as we return to an order block, both long setups. Could have caught a scalp on this one. Could have caught a really nice move on this one. On this entry here, you would have been targeting, buy side liquidity here, okay? Or you could have let it run and seen if it hit order block, which it did up here. Okay, so there's a couple different ways you could have played that trade if you entered it. Unfortunately, I did not catch that, but that's one way. Those are two entries you could have taken. Okay, what we did catch was this move here, and I'll show you. That's the one that ended up playing out as a full symmetrical swing. And let's take a look at that. Okay, so we had swing high, swing low. We got kind of a double bottom look. Okay, we returned to optimal trade entry. Okay, we came down. You got a second shot at optimal trade entry here. Okay, didn't quite get to that 70.5, but we got to that 61.8 to 70.5 range. So those are good entries, both here and here. Okay, we caught that move down, rebounded, eventually caught the move, and ended up perfectly at symmetrical swing. So I'll draw that out for you to see how that worked out. Literally hit it on the nose, came back down, traded back to the low, double bottom look, or run on liquidity, right? And then we ended up trading higher there. So use those FIB tools. Optimal trade entry can help you. It can really help identify that higher low, lower low setup. So if you look and see how we were trying to identify where to start that FIB for that trade entry, because we got a really good entry. We had a, lower high or lower high or lower high, right? We got a higher high. We got a low. We got a lower high, okay? We measure that distance. We look for our 61.8 to 70.5 FIB entry. We got it nearly twice, okay? And then we got a nice sell-off. We got a little bit of chop, and we hit that full symmetrical swing. You look at the silver bullet setup in the New York PM. I called it in the Discord. I said we're just kind of chopping, right? But we did have here, we set a low. We came back down to test that low, okay, inside the silver bullet. And with that run on liquidity here, because you can see none of these highs actually took any liquidity. So the play would not be looking for a short entry, okay, because we are running on the liquidity on the sell side. So right here, we took it. You could have entered here on the original take of the sell side inside the silver bullet. You could have also grabbed it on the return to this low, okay, and that would have been a long entry. You could have grabbed it for a nice run into close. I prefer the morning setups to the afternoon setups because sometimes the afternoons end up being choppy, okay. But also something to watch is the lunchtime session. Okay, we were trading up through the New York AM session, and we started trading down. During the lunchtime, you get low trading, participation. And so where were we targeting? Price was targeting where orders rest inside this order block. We got right down to it before price ran in the other direction. Okay, so really good to watch that lunchtime hour because if we're trading up, likely to trade down during that lunchtime hour, potentially even seeing it continue and complete during the PM session. But it was nice to catch that because we saw that optimal trade entry kind of set up during that PM or that lunchtime session, and you can pretty much guess that we're going to make some kind of run on orders or liquidity. In this case, to the downside. Now, if you were trading down through the session, let's see if we can find an example where we were trading down through a session. So here we hit a high and we were trading down during the AM session and we continued to see that downside. It just depends. In this situation, we were also trading down. You see a continuation. So it's not always perfect as far as like what the afternoon or the lunchtime session is going to bring. You can also see in this one, we were trading up and we started trading down. That lunchtime continued to take us down. As well. So just low. The point to drive home is that there's low market participation during the lunchtime session, and so there's likelihood of having price start to run on order blocks and liquidity zones. So again, as we move in tomorrow, we've talked about, whether or not we see a move of manipulation. Do we see price run back up into these order blocks to try to, trap bulls that think we're going higher and then see that turn off? similar to what we saw last week, where we saw that manipulation move start on a Tuesday and then started selling off and then further sell off into Wednesday? Or do we start to see that price trade down, being the move of manipulation, right? Targeting some of these lower levels, and then start to see price run to the upside Tuesday into Wednesday. So those are things we're going to be watching for. Don't forget to check out the description below. I got linked to the Discord that I hang out in during trading hours. I have links to my socials, links to the merch shop, and a bunch of different things in the description. So thank you guys for tuning in. I hope this has been informative. Good luck in the market, and we'll see you tomorrow.